Okay, let's just start with a number. 52,270 pounds. Looks pretty good, right? You see that gross annual salary on a job offer, and you immediately start thinking about what you're going to do with it.
But then, payday comes around. You look at your bank account, and the number that actually lands there is, well, it's a lot less than that. It's that classic feeling, isn't it? Staring at your pay slip, just wondering, where did all my money go? Well, today we are going to solve that puzzle for good.
Welcome to our explainer on UK income tax. We are going to completely demystify your payslip and show you exactly how the system for a standard employee really works, right from the ground up.
So, here's our game plan. We'll kick things off with your payslip's biggest secret. Then we'll build on that with your tax-free foundation. We'll look at how you climb the tax ladder, see how it's all collected automatically, peek at the actual laws behind it all, and wrap up with why this is so important for you to know.
All right, let's dive straight in. Section 1, your payslip's big secret. This gets right to the heart of the single biggest, most common misunderstanding people have about how they're taxed in the UK.
So here it is, the absolute golden rule. You do not pay income tax on everything you earn. Let me say that again because it's so important. You do not pay tax on your entire salary. If you only remember one thing today, please let it be this. This idea is the key that unlocks this whole system.
Okay, so if you don't pay tax on everything, what do you pay it on? That brings us to your tax-free foundation, which has an official name, the Personal Allowance. And it's exactly what it sounds like. It's the amount of money you're allowed to earn every year, completely tax-free.
You know, the easiest way to think of it is like a protective shield around the first part of your earnings. It's a fundamental principle of the UK tax system that everybody gets a head start before the government takes a penny in income tax.
And for the current tax year, that shield is worth £12,570. So if you earn that much or less in a whole year, you pay zero income tax. Nothing. It is really that simple. This number is the starting point for everything else we're going to talk about.
And here's the cool part. You can actually see this in the real world. Go find a payslip and look for your tax code. If you see 1257L, that's not just random letters and numbers. The 1257 part is literally telling your employer about your £12,570 allowance. It's a direct instruction that says, hey, don't touch the first part of this person's pay.
Okay, so we've got our tax-free chunk sorted, but what happens to the money you earn above that allowance? Well, that brings us to Section 3, climbing the tax ladder. This is where we see how your tax bill is put together, piece by piece.
Now, the UK uses what's called a progressive or marginal tax system. That's just a fancy way of saying you don't have one single tax rate. Instead, think of your income as filling up different buckets. The first bucket, your personal allowance, is taxed at 0%. Once that's full, you start pouring income into the next bucket, the basic rate one, which is taxed at 20%. The key is you fill them up in order. You don't just jump into a higher rate on all your money.
Let's make this super clear with an example. Let's say you earn £30,000 a year. You do not pay 20% on the full 30 grand. No way. First, we take off your tax-free personal allowance. That leaves £17,430. And that amount, and only that amount, is the portion that's subject to the 20% tax. This visual really helps. Just think of your salary as this bar that you have to fill up. The first £12,570 at the bottom is completely tax-free. Then, your money fills up the 20% section. For someone on $60,000, it's only the small bit at the very top that spills over into the 40% section. All the income below that is protected at the lower rates. And this brings us to the biggest, most damaging myth about tax. The fear that a pay rise will actually leave you with less money because it pushes you into a higher tax bracket. That is completely 100% false. Because you only pay that higher rate on the small slice of your earnings inside that bracket, a pay rise will always mean more money in your bank account. Always.
So, now you get the math. But how does the money actually get from you to the government? You're not sitting at home writing checks to HMRC, are you? Well, that's where the automatic collection system comes in, which you probably know as pay-as-you-earn or PAYE.
PAYE is basically the engine of the tax system for employees. It's the whole process that makes sure the right amount of tax is collected for you automatically. It also handles your national insurance contributions, that's the other big deduction on your payslip, all before the money even gets a chance to see your bank account.
And the process is actually really straightforward, and it all happens behind the scenes. HMRC, the UK's tax authority, sends your tax code to your employer. Your payroll department uses that code to do the maths, they deduct the tax from your wages, and they send it straight to HMRC for you. For most employees, it's a completely hands-off system.
Okay, so we've covered all the practical rules, but where do they actually come from? To really get the full picture, we need to take a quick look at the law behind the numbers, the legal bedrock that holds all of this up.
Yeah, these rules aren't just company guidelines, they are literally the law of the land. They get debated and passed by Parliament and written into these huge formal pieces of legislation. That emblem there signifies the authority behind every single calculation on your payslip.
Now, for anyone who wants to really dig in, these are the big ones. The Income Tax Act of 2007 is the main playbook. It sets all the rates and allowances. Another act from 2003 is what legally defines what even counts as taxable earnings. And the PAYE regulations from that same year are what legally require your employer to operate that automatic system we just talked about.
And check this out. Here's a simplified quote right from the law itself, from the Income Tax Act. Sound familiar? Identify income, deduct relief, that's your personal allowance, and then calculate tax. It's the exact same process we just walked through, just written down in official legal language. Our whole explainer has basically been a translation of these fundamental steps.
So we've gone from a single number all the way through the tax bands, the collection system, and even the law itself. Let's bring it all together and focus on the really important bit, why this all matters to you. This is your takeaway.
Okay, here are the 3 crucial things to lock into your brain. First, you have that massive £12,570 tax-free shield. Second, never ever fear a pay rise. That marginal system means you always benefit. And third, you can relax because the PAYE system is designed to handle all of this for you seamlessly.
And so, we'll end with this question. Now that you actually understand the rules of the game, how does it change the way you see your own earnings? You're no longer just a passive observer watching deductions happen. You're an informed participant who knows exactly what's going on. How does that change the way you'll look at your very next payslip?